Hello everyone, this is Osama Rizvi from Primary Vision Network and welcome to Monday Macro View. Before starting the show, I would like to just share my thoughts with you of what's going on, and clearly it is a lot. So recently, from especially post-pandemic, I believe that to make sense of the world, we need some frameworks. And one of the best frameworks I've recently come across is Adam Tooze's um, polycrisis, which means that there is a lot of crises happening at the same time. Another one that I read recently was Christopher Hobson's in his Substack, really uses Beck's, the famous sociologist, framework of metamorphosis. And he puts it quite brilliantly that we are living in an era where change has outpaced comprehension. There is a lot going on, and we cannot comprehend on every scale, in every domain and aspect. And not only that the complexity of the world has increased, the increase in the speed of complexity has also increased. And what does that leave us with? It leaves us with the contemporary risks being prolonged, being there for long. And when that happens, we see that some of them, or most of them, culminate into a crisis. We talk about economic risks, climate risks, geopolitical risks, social risk, political risk, all of them. So, in my mind, things are framed this way. And what we're going to talk about today is, we're going to relate it to that. First of all, Sri Lanka. If you look at inflation all around the world, the figures are going to be decades high and into double digits, I'm sure. But Sri Lanka and like Pakistan or African countries, these all countries are what I call the global south or developing countries or the emerging economies. And I've always tried to highlight that the effect of the global developments is always disproportionate on this part of the world as compared to the developed world. Inflation in Sri Lanka is 74% almost. Food inflation is 87%. So while the indicators, global indicators, they might be showing a downward trend, I wanted to highlight that in the real world, these things don't disappear that easily, that quickly. Even the inflation itself, Mark Rossano has been speaking about it from more than a year, that we've always maintained that it was sticky, not flexible, because of the whole situation we were in. And this is Sri Lanka. Talking about Pakistan, inflation is in double digits, more than 20%. According to Steve Hanke's inflation index, it's 40%. And to be honest, that is what actually feels like it is. Gas prices is on our doorstep. There is winters is approaching, and there is literally no gas. We are rationing gas by time slots. So there is a certain amount of time where you can use gas, and then there is no gas. Why it is important? Because these countries owe a lot of debt to the global north, to developing countries. Post pandemic, of all the increase in debt, addition in debt, about $100 trillion of increase has come only from the developed part of the developing countries in the world. So this should be a concern for everyone. Closely related to it is China. Not closely related in terms of the economic indicators, because Chinese economy has been in news these days for not the right reasons. And there were quite a lot of concerns regarding the second largest economy in the world, and according to another metric, PPP, the largest economy. Anyways, whatever happens in China has a huge significance, not only on the fundamentals, but also on the market sentiment, the collective market sentiment. So Chinese economy performed comparatively well as compared to the estimates that we were getting, 3.9%, but the risks still remain. What are the risks? Well, Mark Rossano has spoken about these in detail. I mention him because it's just, I really appreciate his anticipation in terms of what is going to happen based on the facts and the current developments. So it's real estate issues, the structural issues. Recently, there has been a political development. She has elected, sort of purged the Politburo of all the people that had even an element of dissent in them. And now he's surrounded by, as one article in The Guardian said, yes, man. And we will see that how that pans out in terms of China's future or the near future's economic growth and trajectory. Another thing that I also want to highlight, and you're saying that we're jumping from one region or one news to the other because that's the nature of the show. We try to take a wider view, the bigger picture. This is very important. Developing countries and the weather, because this clearly has a huge and significant economic effect. So this recent report, the cost of delay, shows some tremendous, terrifying figures. I mean, 189 million people every year from the developing countries are affected by the emissions that mostly come from the developed countries or the industrialized economies. What was more concerning was one thing, as you can see it on the screens, that only 6 fossil fuel companies reaped enough profit that they could cover the cost of these major events and climate-related events in the recent years, and would still be left with $70 billion. Talk about the asymmetries in the world. This is really important. Behind these figures and facts, there are real families, or families that then those who suffer from unemployment, raising costs of living, social unrests, instability, political instability, vicious circle, regional conflicts, and whatnot. So the repercussions go beyond our imagination. Shifting to another aspect, oil prices and oil markets. Very interesting these days, bifurcated between those who think that there will be an oil demand destruction and those who think that there will be a supply crunch in the coming months or year. I belong to the first group. I think, and I maintained as well in my articles, that under the light of the facts that we've discussed from the past 2 weeks, today, and IMF's recent World Economic Outlook, China's demand, and other developments in the world, I believe that we are not going to see any supply shortages. In fact, we're going to see a lot of demand destruction. If I'm not mistaken, next year, IEA's short-term oil market report recently released, it said that demand will fall by another 470,000 barrels. That's a significant figure. This chart was very interesting. Mark used this in one of the shows last week, EIA, one of the segments, and it really puts things into perspective. So 2 million barrels of cuts. We never thought that this was going to happen. But this really breaks it down, because when you include the increase in Kazakhstan's input and the cuts that would not be made, the Libyan increase in Libyan production, so all of that leaves us with the actual cuts, which would be around 200 to maybe 250,000 barrels per day. That's all. And I think the people at OPEC Plus, they were quite astute enough to realize that we're not going to see a supply shortage anytime soon. December 5th, European oil embargo goes into effect. Sure, there might be a temporary rally, but I maintain that the bearish factors are piling up in the global economy. The risks are there. We might not be seeing it. There might be over-representativeness of some geopolitical risk premium, but all of that will vanish away after some point, and I think there would be a massive correction, if not a crash, in oil prices. Finally, the market sentiment tracker. I find it really hard to sort of locate news in this section. It's not only geopolitical risk, of course, it's about the bullish factors as well. So it was difficult for me to find bullish factors for oil recently. But yeah, one of them was that US Navy recently, someone from US Navy said today that China will attack Taiwan next year and the world should be prepared for that. Expect some exchange of word war between both the countries that might tip the balance of the markets in one way or the other. Iran has been accusing, what's happening in Iran is really concerning, and we discussed that recently in the last show. So Iran has accused US of direct involvement, and it now says that it wants to sue US. Of course, that would draw a response, and geopolitical tensions can sort of fire up a little bit. China's GDP, I've discussed, that's a bullish factor. Might be good for their oil demand. However, if you see on this side, I've also written that demand from China remains lukewarm. It's as compared to August, it was good, but not as compared to the past few months. It was still down. due to China's political development in China, Japan's Hang Seng was down 7.3%. Chinese stocks reacted a negative as well. So that was also quite concerning. Europe's long-term forecast for winters, it shows harsh and dry winters. And we have discussed this, that why the future of the European continent depends upon this winter and the next one as well, because in either case, they're going to use their inventories, and then for the next year they have to fill them up once again. And this is when supply from Russian gas has almost dwindled to insignificant levels. That's a concern. There was a very interesting video that textile workers. There was a firm in Tuscany, Italy, and the manager showed one bill that was 87,000 euros a few months ago, and now the same bill for the same facility was $750,000 euros. That is an insane amount of increase, and once again speaks to the real part of the problem, that indices might be falling down, but the effect of that downward trend would take months, if not half a year, to reflect in the real economy. And until then, people, companies, job markets, sentiment will suffer. That's what's happening. Eurozone activity, the PMI in Eurozone, that fell below 50, of course, signaling contraction. That was another concern. Global growth has been forecasted to grow only 2.7%. So all of this, once again, I would use all of these factors to maintain that the world is entering recession. Germany, Italy, US, the developing part of the world, all of it is going to happen. There is no other way. We'll have to go through that, and then the tide will start to turn, and we might go towards some improvement, but it'll take time. Russia and Ukraine conflict still remains there. That's the only outlier, as in if we talk about the geopolitical risk. Otherwise, I think a sell-off, prices falling down, or a somewhat alleviation in overall asset prices is impending. So that's all from today. I hope you liked the show. Please let us know in the comments what you think, and looking forward to see you next week.